Hey everybody, good afternoon. Welcome to 12-Minute Trading Live. My name's Doc Severson. Today is Monday, the 24th of June. We're getting into the very end of the month, the very end of the quarter, and halfway through the year. And I'm joined here by Dave Lukas of 12-Minute Trading as well too today. And we have some movement in the market. Imagine that. This is what we talked about a week ago, last week. You had talked specifically, Dave, about the NASDAQ being outside of the upper Bollinger Band on the daily chart, and saying that when it goes outside the bands, it's like the band, the ropes in a boxing ring, it tends to push it back down inside. And it was just a day or two.
And we're seeing that now, although
There we go.
are looking here. We're definitely back inside the daily. The weekly chart's the one, though. So weekly, we just came back inside it, right? So, but we're still extremely exhausted on these charts, right? So, I mean, we could pull back as far as 18,300 or 400 on this on a weekly chart pullback and still be at a nice higher low. On a daily chart, definitely 19,000 could be in the cards to charge this thing back up if it wants to. Now, we could just go sideways too at this point as well. So there's a few different ways this thing can go, but I will tell you, so goes some of these big players, so goes the market. So Nvidia has been selling off since the end of last week. I think I saw it was down 6 or 7% earlier today. So not uncommon after a big split like that, right? To see a stock give back some and everything. So watching this happen, this is fairly normal.
It's interesting because as Nvidia was like going sky high, the thing that you and I talked about a couple of weeks ago was to say, hey, let's wait for the post-split depression, and then let's sell some puts down here. And we're almost at the point where it makes sense, because if you go out here to the option chain on Nvidia, let's say we go out maybe 53 days, which is a pretty typical time for selling puts. Mm-hmm. And if we start looking at where's the area that we can make at least 1%? So if we look at the strike price here, we are 1% all the way down here to like 90. So you can make a 1% return. If you sell the 90 strike, you get $1 for that. So that's at least a 1% return. So I'm looking for more like a 2 to 3% return. So to me, about the 100 strike, I bet you anything that's going to be heavily defended at 100.
I'll tell you what, though, looking at its charts, I mean, its weekly energy is at 23.
Ooh.
Its daily energy is maybe at like 40. And if you look at the charts, the breakout there's around 90, 95. And so I can see it pulling back to 90, 95 to that breakout spot.
Right. So the monthly chart in this case is almost useless. If we look at the weekly chart, yeah, you're right. Look at that. So maybe this is going to come down to that swing test here at about 97. Man, what I would do,
still in the 70s on that thing. Look at how exhausted that thing is, though.
Well, I'll tell you what I would do, Dave, is if I got this thing down here to basically this swing test, just below 100, I would probably sell at the money, and I'd go for some mammoth credit on this. Looking right now, like at the money, you're talking about, and it's going to be, if it drops down to that, it's going to be even bigger. So you're talking about like a $900 to $1,000 credit per, so you're talking about, a 10% return on that short put. So
you could do a nice wheel on it too. You could just buy shares at that point and sell right at the money, on a call, and then
you could
buy a defensive put on the backside or spread, and you could run that. Heck, that'd be a good time to get in and just like do it every week for a while and run it back up.
Yeah,
if it takes it away from you, it takes it away from you.
So what Dave is talking about is if the price comes down here, I know this is upside down, but if the price comes down to make actually these options maybe at 100 at the money, you'll see these options here at 100, instead of being worth 245, 247, they're going to be worth 900, 920. What you can do is you can just do a buy right. You can buy 100 shares for $10,000 and then immediately just turn right around and sell the calls just out of the money on them. and that's going to bring in $1,000. I mean, right off the bat, you get a 10% return. You know, assuming the price doesn't go anywhere. Now, how likely is it that the price is going to drop from there below 100? I'd say pretty low. That's a pretty strong level of support down there. That's what we call a swing test. And by this time, you're going to see exhaustion to the downside on the weekly chart. Or actually what you could see is you could see a fully charged, because this will charge the weekly chart. And then you're going to see exhaustion. You're going to see exhaustion on the daily chart. So, yeah, I'm looking forward to that. It's like right now is you know, there's a possibility it might bounce, but I think you're right. I think this could be a gap fill and a swing test, which means the price goes all the way down.
We'll just have to see, but I think that, you know, would not be surprised with the NDX being as exhausted as it is and everything. Now today things really reversed. So today was a great trap. Today was a great retail trap. You know, spiking, especially the SPX was up like 25 to start the day, right? And what is it, down like 10 or 8 or 10 now? So that was a perfect example of a good old, you know, trap for retail when you're into exhaustion, when you're at the, you know, kind of at the highs, like sell off a little bit last week, shoot up 25 points to start the week. Everybody's like, oh, it's back on, the rally's back on. And then, you know, hold that for a little bit and then just fade them out, you know? So that's a pretty normal thing to see.
Yeah, in the trading room this morning, what we did was we were waiting for the opening range, and for the first 20 minutes or so, we had a very small opening range. It was only like 8 points, and all of a sudden, boom, blast off. We, like you said, we went from 25 up to 58. So what is that? That is how many points is that? That's 33. That's a 33-point swing in like literally no time at all. So as we were closing down the room, I said, look, I don't have a signal right now, but what I'm looking for is for the price to kind of come down into this area and set up, at this point, it set up a lower high and then a lower low. So at this point right there, it was saying that it was probably going to be heading lower. Now we did get this bonus consolidation here. I got in around this point. I think it was 10:20 or so. I got in and I was out in 20 minutes. I didn't get my full $50 a contract, but I did get my fair share, and that's all I care about every day. So, yeah, waiting for the opening range to set up was key, and it will be key throughout the rest of this week as we have PCE coming up. So that's going to be our big risk for the week is PCE. We have a little bit of Fed speak today and tomorrow, and then after that, it's we're kind of.
Don't forget you have a debate Thursday night. So the first presidential debate. So that should be interesting to see. I'm just watching these charts. Looks like we got a little bit of a buy program coming in. I expected to see that from the lows of the day. I don't know if it'll hold, but the.
How would you
today could be kind of the set, and then we go nowhere for a few days, and then we trade on Friday based upon even that debate as well as the PCE that we get out there. We'll have to see how it plays
Dave,
out.
what would you want to see from the debate to get a market to move in either direction? What kind of certainty or uncertainty would you want to see from that debate?
I don't know if it's a certainty or an uncertainty. You got two. This is a weird election. This is the first time in really everybody on this is on watching this and everybody out there's lifetime where you actually have two people that have been president.
That's true.
You know, so they're both known commodities for the markets, you know, and that's an interesting thing. They're both known commodities in the markets. And so I think the big thing will be is I think the market right now is pricing in Trump somewhat, right? Based upon where things are going and all that. So, you know, and it's I don't hate to say it, it's true. I mean, like Trump has more to lose in this than probably Biden does. I mean, if Biden can stand there for 90 minutes and stay standing, that's like a win at this point, right? You know, so
very true.
I think, you know, we'll have to see if Trump does anything that really the market says, oh, he just hurt his chances, or that's going to help Biden. I think the market may not like that, right? So, because I think they are pricing in a Trump victory somewhat. So, yeah. That's just how it seems the market's been going at this point in
The
time.
other thing too, now this goes back to 2008, but as funny as this sounds, there was a rally
Mm-hmm.
in August of 2008 when John McCain picked Sarah Palin as his
Yeah,
running
yeah.
mate.
The VP pick is coming out soon.
And that may come out this week. Now, it's funny to look back at that and say, "Wow!" But it was something. It was something new at the time. It
Yeah,
was she was somebody that nobody knew anything about
right.
until Saturday Night Live got through with her. But but at that point, it was like, "Oh wow, this is exciting." Well,
Yeah.
the market did get a bounce out of it. So we'll see if anything like that happens
Yeah, I
on
mean,
Thursday.
I think we're going to be, I think it is going to be volatile for the better part of the rest of the year. But I mean, election years are, typically even from now through the end of the year, you go up overall.
Hmm.
They're 10% or so in a lot of cases. So I think for now, we're seeing textbook exactly what we should see with exhausted energies, pullback, right? I think you'll be volatile this week. Remember, Friday is also the end of the quarter. So you have a lot of confluence in one day this week
Right.
that, can be, very, market moving, right? So today you're seeing some sell off. Tomorrow you can see this thing bounce back and run right back up like it did. I think we ultimately go nowhere through the week, but we're going to be very volatile and choppy. And then I think next week is you got a holiday in the middle of the week, right? It's going to be a very low volume week, which is prone to big moves and things like that. So that's what I've been saying. Like the next 2 weeks, I just think are really volatile, choppy weeks that we're going to have to go through. And once we get through that, that probably will have charged back up like the daily charts and, probably help the weekly charts some. And then we could see the next leg of a rally into August some. And then you get into that, you'll have the Fed meeting in July. You'll have another round of inflation reports. And then you've got that kind of period from that point through to September. And, we'll see if there is, any, you know, selling during that typical time into August, early September and stuff. I think the fall ends up being like that, normal standard stuff. After the election, we rally.
Now, what I'm interested to see is because there's going to be so much, uh, the NASDAQ is so overextended and is due for a
Mm-hmm.
rest. By the same token, the Dow has been in a holding pattern really since the spring for a long period of time here. So range expansion, range contraction, this thing's ready to go. And I
Right.
wonder if we're going to get that rotation out of the NASDAQ. We're going to see some profit taking in the NASDAQ. We're going to see this thing take off. Now, we had the same thing happen back here, like back in October of 23. Um, the we had this a couple of times. The Dow was the first one to lift off from the bottom of the bear in 22, and then we saw again the same thing happen last fall, last October. And so I'm wondering if we're gonna see that rotation again. So that could be interesting. I don't know what sector gets. I don't know what sector out of the Dow gets the funds, but just about everything in there. I mean, just about everything in there could be recipient to this. So we'll see. And then the S&P, of course, is going to be in the middle of something like that. And then the
Mm-hmm.
Russell. And oh, by the way, there's a few of you out there live today. So thank you for joining us. And if you have any questions, please let us know if there's something that we can address immediately. Same kind of thing is happening in the Russell. Strong off the bottom here, pretty thick in the middle. Consolidation could break out. If we see a breakout above 2100, then that's exactly what's happening with the Russell. Very, very sloppy chart right now, almost untradeable
Yeah.
from that.
Yeah. The Russell, I actually have been really liking the Russell because of it's in like it's gone nowhere for 2 years. Like I mean, you look at that weekly chart and it's really gone nowhere for 2 years. The At some point that thing is going to go gangbusters in a direction. I don't know which way yet, honestly, but at some point it will. But I've been trading, like my short-term trades as well as my even my small account like iron condors on a monthly basis almost exclusively on the Russell, because it really has been range bound for so long. It's been really good for condor trading, but you can just see it's just really gone, it's just going nowhere.
Yeah, and the implied volatility on the Russell is not at the lows. It's not at the lows that it was back in the end of 2019. It's somewhat elevated,
Exactly.
and so that's kind of in line with what you're seeing range bound on the price action.
Yeah. Yeah. And
So
that it just continues to do that. But at some point it'll break out, and that's when I'll have to be careful. But for now, it does. It does a good job staying in about a 200 point range, you know? So
let's see what these Mag 7s are doing right now. Actually, what's
yeah.
interesting is the Apple monthly chart is ready to go. It's just the weekly chart's in bad shape right now. Could use some shake and bake in here. And same thing probably is happening to Amazon. Amazon actually is in excellent shape, with the exception of the monthly chart. Monthly chart's a little bit, but this looks like it's building a great big cup with handle. And we're seeing that handle on the weekly chart. And this is almost showing as an ascending triangle on the daily. So
Right.
the upside target from here is the open end of the triangle. That's going to get it over 200. So Amazon looks pretty good right now. Let's see what the next one in line here is. Is that Meta?
Tesla is bouncing off of the lower Bollinger Band. I've been playing the wheel on that one a little bit.
Meta actually looks pretty good here. Let's see what Tesla's doing. We already looked at NVIDIA. Yeah, there's that trend line. If Tesla gets over 200, this thing could run. Actually, what's happening here is this is a giant triangle. Look at this. This is a giant triangle. Just a mammoth consolidation pattern. That's why we do fractals, guys, because this allows you to see the patterns within the patterns. So all everybody focuses on is the daily downtrend. And looks like you're getting your little bounce there, Dave.
Yeah, I said it might kick in, so we're watching it. I would expect this to go into the 3 o'clock hour, and then I would expect us to roll over at the end today, the final 15 minutes or so, and just roll this thing over into probably the lows of the day at close.
Yeah, nice little bounce there. Could be any one of the Mag 7 pushing that thing. Okay, let me know if there's any questions here, guys. We certainly love to take questions live online. Otherwise, we'll continue for a few more minutes looking at the charts and opining on today's. It should be an interesting week. Again, there's so many things that are coming into play here. Like Dave said, the end of the quarter. So we typically get a little bit of window dressing. You see a little bit of rotation into the commonly known stocks, and then you see window undressing the next week, especially if things are too extended. But yeah, that's a nice little bounce into the end of the day. And then we've got, of course, a number of like home reports, like new home sales and housing index and things like that. We do have some Fed speak on Monday and Tuesday, but nobody cares that much about that.
No,
The Fed's off. I can't believe that actually we have a decent probability of a Fed cut into September. I think the only way that happens is if we start to sell off really hard from here. If we start to see,
it's gonna have to be something where we have a catalyst that gets a lot of selling, and we get
right,
really, really big time, like sell off and stuff to, freak markets out, freak people out. So the Fed has to do something. But by then, if that's the case, then it's probably too late. And it makes the Fed look like they're scared, and the markets take it further, and it just exacerbates it. I just don't see that. I do think that the underlying, I've said this before, the macro side is not great, but I don't think we really see that impact until 2025. So I think next year is going to be the rougher year.
Yep.
Yeah.
Okay, folks. One last call for any questions or anything else like that. Otherwise, we'll keep looking at these charts and see if we can see something.
Yeah,
that
so
didn't-
I'd say expect a dip now, right? Expect to see, some dip in the market now, and then, volatile for the next 2 weeks or so, and then we could get back to trending into August, and then you get that, typical volatility through the fall. Jackson Hole, the Fed September meeting is going to be a massive meeting because that's when people are like, they're going to cut rates in September, right? And so you've got that. That's going to be a big deal, and then you'll have some volatility before the election. Once the election's over, I think we are off to the races.
For at least a
That's how
month.
we pan out. Yep.
For at least a month or so. Yeah. I
Well, just through the end of December, like we normally would see.
Yeah.
I think that's the
key. It'll be sometime like, it's interesting. I mean, the bear market that we had in 2022, it almost literally began on January 1st, or the first trading day of the year. People that were holding off and didn't want to sell until the new year, people that didn't want to take profits, held off until that very first week, and then they dumped. And then it just, what made it turn from a pullback into a bear market was the early spring, like in March, when Jay Powell said, no, raising rates, guys, raising rates. We're going to keep raising rates. And then the market was not happy with that. So
yeah, I don't see that happening, anything like that happening, but I do see them. They're going to try to keep the hope alive as long as they can. But I don't know if we'll see any rate cuts this year.
I would bet money to say no, even though we do have the Fed funds futures are showing a 2-to-1 probability of a rate cut by September. Now there is actually a Fed meeting the day after the election. And that's going to be really, really interesting to see if they game.
What do they do?
If they game the election based on, but they're meeting that Tuesday into Wednesday morning. And so they would have to make a very quick call. And, frankly, I don't know if we're going to know the results of the election.
Well, realistically, the election should not have any bearing on their decision.
Of course.
The fact that it will tells you something else, right?
The fact that it will.
If they're data dependent. So, yeah.
Oh, my gosh. Yeah. We're starting to see through the cracks in the armor.
Yeah, all kinds of fun stuff. But guys, this is following a typical year. This is not surprising. We are we're getting kind of summer. The summer rally usually runs a little bit further. It usually runs into July, but we start a little bit earlier. So we've got an exhausted weekly chart, exhausted daily chart, needs to charge back up. Pulling back for a week or two is exactly what they need to do to charge back up, or even at least going sideways at this point and just charge themselves back up. That was very normal. So if you're going to take time to enjoy just the holidays or the holiday next week and stuff, right now is a great time just to sit back, let that happen, and then get ready for the next swing. And then, we'll obviously be here and be talking about it. So.
That's true. That's true. When are you, let's see, you're going to be out, not
end of the month.
Yeah, end of the month. So you're good to go. You're good to go next week.
So we're here next week. Yeah.
All right. Okay. Well, thanks everybody. Thanks for joining us here today on a Monday, and we will see you next week. So thanks everybody. And
thanks,
again,
guys.
for those of you joining us through the replay, let us know if there's anything that we can answer for you by sending us an email. Thanks everybody. You guys take care. Have a great Monday.
Bye.